In this presentation, we will do a bank reconciliation for the second month of operations after having entering the bank feeds and then uploading those bank feeds or approving those bank feed processes into our financial system. Get ready, because we're dropping in with Wave. Here we are in our Get Great Guitar dashboard. We're going to start off by opening up those financial statements. We'll go down to the reports down on the left. We're going to be opening up the balance sheet and, of course, the income statement, P&L, profit and loss. Starting with the balance sheet, so we're going to be opening up the balance sheet. Then we're going to go up top. We're going to be right-clicking on that balance sheet and duplicate it. Going to go back to the tab to the left. We're going to do the same thing with the income statement. Opening up the reports on the left-hand side. Taking a look at that income statement, P&L, profit and loss, opening it up, then right-clicking on the tab up top and duplicating that tab. We're going to go back on over to the balance sheet. Within the balance sheet, we will change the date back to 2019, selecting the drop-down, bringing that back to 2019, and update the report. Going to go back to the P&L income statement, same process, drop-down, 2019, update that report. Now what we're going to do is the bank reconciliation. We've uploaded the feeds and we've approved the information. So we've allocated everything from undeposited or uncategorized income to categorized. And so we don't see the uncategorized items on the income statement. And when we consider the bank reconciliation, noting that we are dependent entirely on the bank, meaning we're kind of waiting until the feeds go through the bank to create the financial statements with them instead of basically entering in the data first and then doing the bank feeds. We should not have any reconciling items. We still want to compare, however, periodically to the bank statement, usually monthly. So at the end of the month, this is going to be our bank statement. This is our beginning balance, which of course was our ending balance for March, now being our beginning balance for April. And then we have the additions and the decreases. This is our ending balance. Now, of course, down here is all the detail. This detail is what we have entered into the system with the bank feed. So this is the detail of the increases and decreases that gets us to this ending balance 186,623.08. So here we have the 186,623.08. So we're tying out. Note, they wouldn't exactly be the same, so just don't get the idea like when you do a bank reconciliation that your books as of this point in time should always match the bank. They only will if you're completely dependent on the bank to make our books, right? Because I mean, if you made the books first, then we'd have outstanding checks and outstanding deposits, and therefore you'd have to go through the reconciliation process to find those in order to reconcile. But here it's still good to go on down to the reconciliation items and just kind of match these out to make sure that we are all set down here. So we're going to go to the accounting, reconciliation, the checking account, and then I'm going to go reconcile the new transactions. And then the ending balance is going to be the 186,623.08, 186,623.08. So let's do that one more time. 186,623.08. That's it. That's the one. Saving that. And I hope I didn't. I should have changed the date to April, so it should have been a reconciliation for April here. So then, if we go into this, we say view the reconciliation transactions and see what we have in here. We could then compare and contrast and just match these out to what we have on our bank statement. They should be exactly the same because we got these in there from basically the bank feeds we're imagining. But no, when you reconcile, just to practice, you always want to go from the bank statement to your books. If it's on the bank statement and it's not on our books, we'd have to add it. And if we had bank feeds, that means somehow the bank feeds got missed or we deleted something. If it's on the books and not on our statement, if we weren't reliant on the bank feeds, it might be okay because that would mean it's an outstanding item that would clear in the following month. So you always want to basically reconcile from the account here back here because to the books. So we would be looking for that, the 996. I'm just going to check these off as we go. There's the 996. I'm going to make this green. I like to make them green when they're done. So green. Then the 17,000. So going back over here, we're looking for the 17,000. And then we have let's go back over here, make that green. The 2047, so back over 2047, so that looks good. Make that green. Then we have the 11,000, so 11,000 going back over. We have the 11,000. Okay, make that green. And then the 500, so we have the 500. That looks good. We'll make that green. Then we have the 360 back over the 360. That looks good. So I'm going to right click and make that green. We got the 3539. That's going to be up here. 3539. Notice it might not be in the, well, it should be in the exact order if you got it directly from the bank. But the 630. And then we have the 1359. So I'm going to pick up the 1359 and make that green. We've got the 168. So the 168. And then we have the 1359 again. 1359 again. The 12337. So we've got the 12337. And the 830 is going to be the 830 here. And the 648 and the 3512. So that's going to be the 648, 3512. And then the 100 and the 20 are going to be these items down here. So we check everything off, and like I say, if we got it directly from the bank statement, then we won't have any outstanding items, and we should be able to check them off directly because these items have been received directly from the bank statement. But it's still good to kind of double check those items. So that's going to be it for now. Next time we're going to be looking at credit card type of information and going through a similar kind of process with the bank feeds for credit cards. So that's it for now. Let's get out of here.